Welcome to Leads and Leverage, Real Estate Team Leader Lounge, where success in real estate meets passion-driven leadership. I'm your host, Tyler Gibson. I'm an entrepreneur, real estate team leader, and investor, and I'm thrilled to have you join us in the ultimate hub for real estate excellence. In this exclusive lounge, we're diving deep into strategies, tactics, and stories that fuel the success of real estate teams. Whether you're a seasoned pro looking to take your leadership skills to new heights or an aspiring entrepreneur ready to build your own powerhouse team, this podcast is your go-to resource for insider insights and actionable advice. Get ready to hear from top experts, industry pioneers, and real-world achievers who are making waves in the real estate world. We'll explore the best practices, share invaluable lessons learned, and equip you with tools you need to thrive in today's competitive market. Welcome to the lounge where leaders are made and success is earned. Come on in to the Real Estate Team Leader Lounge. Well, hello and welcome to another episode of Leads and Leverage. I'm your host, Tyler Gibson. I'm so excited to be joined by Zihao Wang today. Thanks for being here.
Thank you so much for having me, Tyler.
Super excited to talk to you. You're not the typical guest that we have on here, but I'm excited to learn a little bit about what you guys are doing. Nobody else knows yet. So tell us a little bit about yourself, your background, and what it is that you guys are doing in the real estate space.
Yeah, for sure. So I run a real estate private equity firm called Motiva Holdings. We are the real estate arm of my family's family office. We're a second-gen family office based in LA. We originally made our money in the fashion industry, but since 2008 have been primarily doing a lot of multifamily investing. Currently, we're in Southern California, we're in Florida, and we're in North Carolina. So yeah, my day-to-day is primarily on the acquisitions and capital markets side. So constantly talking with brokers and agents and trying to build relationships and finding good deals.
So I'm gonna ask this question because I know the first time I heard the term family office, I wasn't really sure what that meant. So for the audience that may not know what that term means, could you give us a little description of what a family office means?
Yeah, it's a very loose term. Everybody kind of has their own little definition of it. The way I see it is if a family had like a liquidation event, either selling a business or had some event that gave them a lot of cash, they typically don't want to rely on private wealth management firms or other people to manage their money. They want more focus and more interest alignment. And so what they would do is hire their own internal team and manage their own money for them. So for us specifically, our family office consists of 12 people. And their full-time job is to manage our family's money only. And that, involves real estate, that involves venture capital, private equity, hedge funds, et cetera. And so it's more of, I think, interest alignment and more focus to a particular family.
Awesome. Thanks. I appreciate that explanation. I think that's really helpful for people just to gain context for what it is that you guys are doing. You guys made a truckload of money at some point, and now you have a business essentially that manages that wealth to invest it, make it grow, make it last a really long time.
Yes,
right?
Correct.
Awesome. And you do the acquisitions for the real estate portion of your guys' family office. Tell me a little bit about that. How did you get started in that side of it?
Yeah, so I got started through the family, right? So I'm second gen. My parents was the original kind of founders of the family office and the people who made the money in the fashion industry. I got started when I was around 13 years old, actually, following my parents around. Started on the property management side first, just to learn the ins and outs and nitty gritties of operations. And so was kind of following my parents around, doing repairs and maintenance, understanding rent collection and all of the kind of different line items that, I deal with on a day-to-day in terms of acquisitions and try to assume, right? So did that for 2 years and then realized that, that shouldn't be the bulk of my time. So moved more towards acquisitions and trying to find good deals. And have been doing that for the last 6 years now, more on the acquisitions as well as trying to do capital raising and work together with other family offices on the capital market side.
Gotcha. So, what kind of deals do you guys look for in the real estate space?
So we're very focused in terms of asset class. We primarily do multifamily. And then we're also, in terms of strategy, we either play in the value add strategy, where we, go into the property, spend a little bit of CapEx dollars to improve the property and then improve NOI. And then also we do some ground up developments. So to date, we've done 35 projects. Four of those have been ground up developments. And then the rest, 31 of those have been value add projects.
Very cool. So, where do you find these projects that you guys invest in and participate in?
I would say like 99% of our deal flow comes from brokers and agents. We try to keep really, really good relationships with the top producers in almost every region that we cover. And because we've been in the market for so long, right? Like if you count my parents' time, it's been 16 years since we've been doing this. And so most of the brokers know about us and would send us good deals, whether, if it's off market or about to go on market or something in that situation. And very rarely we do get listings from, well, not listings, but deals from lenders. So lenders typically, when it's pre-foreclosure or like a deal that's not doing so well, or maybe a partner in the deal doesn't want a piece of that equity anymore and wants to exit, then lenders would typically also call us because of our relationships with them.
Very cool. So, what do you look for in a deal? I know that you said that you were looking for value add, but if there's a broker out there listening to this and they're sitting on a deal, how would they know if it's something that you guys would be interested in?
Yeah, it depends on the region that we're focused in. So, for example, in Southern California, we primarily focus on non citywide rent control regions, so like AB 1482 regions only. And within those, we typically try to go into a deal at around a 5.25 to 5.5 cap rate. Typically like a low 200s per door and a 350 to 370 per square foot, and with around 20 to 30% in rental upside. And so the strategy with that would be like over like a 5-year hold period, I would increase rents based on what the state allows, which is 5% plus CPI. And that gets me to, maybe a low sevens to mid sevens return on cost in by year 5. And then I would exit back down at a 5.5 to try to hit a target IRR of like 16 to 18%.
Nice. I love that. So, maybe I have a deal, maybe I don't. What's the best way for people to work with you? I mean, I'm sure that you guys get a lot of stuff sent to you, and you got to figure out a way to prioritize it as to what you're interested in and what you're not. Aside from just looking at the box, what do brokers need to know in order to be able to work well with you guys? What do you expect from them?
I think first and foremost, like it's a relationship building process, right? Like brokers got to know about us and we got to know about the brokers, right? So instead of like, I mean, you can put me on like an email list all you want and stuff, but before that, maybe like reach out via email or LinkedIn or just go onto our website and just reach out and I answer calls and emails all the time. So like, let's try to build a relationship first, get to know each other, kind of what markets the brokers specialize in, what kind of assets they specialize in, and if we're a good fit for them and we can potentially be, a good working partner together, I'd love to, have some FaceTime and then build a relationship. And then, I think real estate is a long game, right? It's not like, okay, we talk today and we're doing a deal tomorrow, right? Maybe we talk today and we do a deal in 6 months to a year from now. And that's completely fine, right? I'm planning to do real estate for the rest of my life. So definitely want to go approach it in a long-term relationship building method.
Yeah, no, I love that. And what tends to be the biggest challenges you run into when you're looking at deals or vetting deals?
I think at this point it comes down to a lot of pricing. I think there's still a big gap in price expectations between what the sellers want and what the buyers are willing to pay for. For me specifically, so we've done 5 deals in 2024, and all those deals were typically at least around 15% off from what like ask, right? We just had to, it was a long grind, like fell out of escrow kind of situations, and only those kind of deals are penciling for us right now. I think partially it's because of the interest rate environments, hard to get debt, and then also how expensive that debt is. But also another part of it is, we're not seeing the kind of growth that we saw during COVID anymore. So we don't assume like rent growth's at like 10 to 20% anymore, right? So it's a totally different ball game and a totally different market now. So I would say price expectation is probably the toughest part right now. For us, we've been able to kind of leverage our balance sheet a little bit. So we have a lot of liquid assets. So we make, offers all cash. We close really, really quickly. We have a good team that do due diligence. So we do our DD period really, really fast. And so we make it as comfortable as possible in terms of terms for the seller, and to try to offset kind of the pricing that we want.
Yeah, I like that. And I think you're right. It is the expectations between sellers and buyers there's still a pretty big gap there. I mean, we even see it in the residential market still. I think sellers are starting to see the writing on the walls. At least here in my market, we're seeing people be a little more realistic with their pricing. So, I mean, it sounds like you spend a lot of time, responding and communicating and trying to build relationships. Have you found ways, and real estate agents do the same thing, right? We spend a lot of time connecting, trying to build relationships. Have you found any tools, technology, or hired somebody that gives you more leverage on your time to be able to fit more into less?
Yeah, well, I think I definitely use tools like CRMs and stuff like that. But I would say my top of funnel is probably much smaller than a broker's top of funnel, right? Because for a broker, everybody's in that top of funnel. And for me, it's really just brokers and maybe lenders. So mine is much smaller. So I use like generic tools, right? So I use HubSpot for my CRM. I use like the free version of it. I don't really feel like I need to pay for like the enterprise version or anything like that. But I think what I've developed throughout my time, like doing my job, is I can scan a deal really quickly and be able to tell you whether this deal would fit for me or not, right? So that, back of napkin kind of calculation usually gets me pretty well in terms of vetting the deal at the beginning, and takes me probably 5 minutes to do. So it's like, I think develop, like, because I've seen so many deals and I'm so familiar with the markets that I play in, I know what I want and what's kind of the market's willing to pay and stuff like that. And so that definitely helps me in being more efficient.
Yeah, I love that. What are some of those just hot point items? You're going to look at 5 things on a particular deal to know if you're going to spend any more than 30 seconds.
Yeah, so one is definitely going in cap rate. I kind of mentioned for like SoCal deals, I want at least like a 5.25 to 5.5. And that's off of like 5% vacancy and 40% expenses. So I readjust the broker's numbers and see if that fits. And then usually it's around like a low 200 per door. So the 5 deals we did in 2024, none of them were above 230 a door. So I kind of know like a ballpark on that like ceiling for the price per door. Price per square foot, typically between 300 to 370. Most of the deals we did are like 350-ish. But we did do one that's around like the 300 because there were a little bit more 2 bedrooms in that one. And then I try to see like whether there is like 20 to 30% upside in the rents to see if I have a path, like a clear path to push to like a low to mid 7s return on costs by year 5, basically.
Yeah, that's awesome. So what do you guys have planned for 2025? You said did 5 deals in 2024. What do you guys think 2025 is going to look like?
We really want to do somewhere between 8 to 10 deals. For us, like a good year would be around 10 deals. And last year was obviously a slow year. I think the year before in 2023, we did like 0 deals. So the last few years have been really, really slow on our side. And to be honest, we're very happy for that, right? It's like we don't want to buy bad deals. We'd rather, we're not chasing the amount of deals we're buying. Of course, we have a goal and kind of like a KPI within that family, but we never try to chase for anything bad or try to rush into anything. This year, we're trying to do 8 to 10. If we end up doing 8 to 10, we'd be super, super happy and have a great Christmas at the end of 2025. If not, then, we're still, staying diligent with kind of what we're looking for.
Gotcha. And you might have mentioned this earlier when you were talking about your buy box, but what's the biggest size deal you guys would take on?
So the biggest size deal we've done is ground up construction in Florida. Essentially 300 units, around total cost was around $80 million. And we leveraged that to around like the 65 to 70% leverage. So that's kind of the biggest deal we've done. And then the smallest deal we've done is a deal in Southern California, right next to my house, kind of. It's like 7 units. I think it was like under $2 million.
Gotcha.
Yeah.
And you said Florida, California. Were there 2 more?
Yeah, so I'm currently in Florida, North Carolina, and SoCal. I'm actually looking into Texas as well. So
Okay.
super excited to try to get something in Dallas or Houston.
So I assume you're in California because you live in California, and why not play in your own backyard? Why Florida and North Carolina and now Texas?
So for me, it's really important to try to grow a bigger portfolio in terms of like the number of units as well as the number of properties, right? So if we grow too big in Southern California, I feel it's very little diversification. It runs a lot of geographical risk. And also the properties in SoCal tend to be smaller, right? Just because of how properties were built and the amount of land that's available and the type of zoning that the city likes to give, right? So most of our properties in SoCal are under 100 units. And that's, tough to manage in terms of economies of scale. And it also runs a lot of geographical risk. So that's kind of the motivation for trying to get properties outside of Southern California. In terms of why Florida and North Carolina, we happen to have relationships with people, boots on the ground over there. And so that was a very natural transition, right? So like I would say, if we had relationships in Georgia, in Atlanta, for example, right? Maybe we would have went there instead. But back then, some of our friends and relationships were in Florida, North Carolina. And so we kind of decided to go there. In terms of Texas, I think there's going to be a wave of distress that's going to come into Texas in 2025 and 2026. I think people overpaid a lot in kind of the 2020, the 2021 eras. I'm actually seeing it right now, like a deal that was worth $30 million that traded for $30 million in 2021 was just brought to me by a lender that wants to get rid of it for around 16 million. So we're pretty much seeing half price off. Obviously it's super distressed, high vacancy and all of that. I think 16 million is still a little bit high for that kind of property, like that kind of distress. So I'm still waiting, but I think there will be that wave of distress that's going to come, sometime in 2025, if not 2026. And I think there should be good opportunities in Texas.
Are there any states you would not invest in? You would just say, no, thank you, not interested in this state?
So this is kind of like depending on people. I don't like Vegas.
Okay.
A lot of people made a lot of money in Vegas. A lot of people really like Vegas. For me, I've been to Vegas many, many times in my life, right? It's like really close to me, but I feel it's like the kind of the entertainment and casino kind of scenes driving that entire economy. I think it's not diverse enough for me to for me to invest in real estate over there. Maybe if you tell me it's a restaurant investment, maybe I think differently. Well, I think about competition now, but like it's like from that perspective, I like to go into a market with a very diverse economy, right?
Sure.
And this also, for my Texas exploration, I'm also looking more in Dallas than Houston because Houston is more oil and energy driven and it has less of a diverse economy than Dallas does, right? So a lot of the basic fundamentals of a market, I definitely look a lot into.
Very cool. Very cool. Well, thank you so much for sharing all that. So I've taken up a decent amount of your time and I want to be respectful of it. If people wanted to get a hold of you and connect and see if they could add value to what you guys are trying to build, what's the best way for them to do that?
Please reach out via email. I'm also very, very active on LinkedIn. And then you can also reach me on my website, www.motivaholdings.com.
Awesome. Well, Zihao, thank you so much for spending some time with me today on the podcast. And thanks to everyone that tuned in to listen this time. We'll catch you next time.
Thank you so much, Tyler.
And that's a wrap for today's episode of Leads and Leverage. I hope you found our conversation insightful and actionable. Remember, success in real estate is not just about transactions. It's about the relationships you build, the teams you lead, and the impact you make in the lives of others. If you enjoyed today's episode and want to stay connected with our community of real estate leaders and entrepreneurs, be sure to subscribe to the podcast and leave us a review. Your feedback helps us bring you more valuable content and guests. Don't forget to visit our website, gpghome.com/leads and leverage for additional resources, show notes, and exclusive updates. You can also follow me on Instagram at real_Tyler Gibson to join the conversation and connect with like-minded individuals. See you next week.